That was early in the morning, reports saying it hit 1407, but those are being questioned tonight. If you look there, our last all-time low was 13 Rand 84 to the dollar, and that was in 2001. Now, according to Bloomberg screens, we saw that 1407, but according to Reuters, only hitting 1364. So a lot of confusion at the moment as to what exactly happened to our rand, and that's why we're joined by currency strategist Michael Keenan. Great to have you with us, especially today. What is going on?
We all woke up with a bit of a bump, as you said this morning, and I think there's been quite a lot of confusion. It seems as though the rand technically did trade at just over the 14 Rand handle, as you said, but it was basically a misprice, and I think in all likelihood that trade will be reversed, and that the high of today that you mentioned of 1364 is probably going to be the one that kind of holds, which is fractionally down from that all-time high of 2001. So I don't think we should treat 1407 as the new all-time low for the rand against the dollar, because it does look as though it was some finger trouble by one of the traders. Okay, so it's a technical glitch. Somebody just put in the wrong price, and that moved the graph very briefly. Absolutely, and I think it's very important to mention that at the moment trading conditions are very liquid. It's the Northern Hemisphere summer, so a lot of the European participants are out of the market enjoying some summer holidays, and they are big participants in our rand market. Often more of the rand gets traded outside our borders than domestically. So I think this illiquidity, and according to our kind of internal data, market positioning also isn't particularly heavy. So what I mean by that is that not a lot of people have got active short rand positions on. People haven't taken a lot of bets against the rand, which means that you just need a small move, a small order, something like we saw this morning, to trigger it a lot higher. So the illiquid conditions, the market positioning, it was a perfect storm to see this misprice. All right, but now a misprice, so you're saying one trader somewhere in the world can basically put in a wrong number, and should it be that vulnerable? Should we be mad with Bloomberg? Because today the reports have been alarming to South Africans. It's even sparked a Twitter handle that we'll look at, what can be lower than the rand. But this has huge ramifications. It does, and it's happened once before. I remember quite clearly also during the Asian trading period, we had also some Japanese traders punch in the wrong numbers a few years ago, and I think at the time then we went up to over the 11 Rand handle, and it happened very suddenly, and then we came back very quickly, like what we've seen today. So you would think in this day of technology that those kind of things wouldn't happen, but unfortunately they do, and in a very illiquid time of the day, these things unfortunately do happen. All right, okay, so 1364, 1370, we're somewhere around there then, which isn't an all-time low. Yes. But given the downward trend, the panic on the markets that we're seeing, could we hit that all-time low? Well, that's the thing, it feels like an all-time low. It feels like things can't really get worse for the rand at the moment. At the moment, we've got kind of a number of factors at play. We've got in the background, which isn't really at the forefront of people's minds at the moment, but still something to consider, is the US Federal Reserve likely to hike interest rates later this year. That's not good for a currency like the rand. We are a high-yielding currency. People have chased our yields for many years, and with US rates now going to go higher, people are going to unwind or cut those positions, so that'll be rand negative. And even if the rates don't go high, it'll be because of something even more cataclysmic happening in China, which is also bad. Well, exactly. That's the second factor, and I think that's the dominant force at the moment. We've seen a lot of concern about the health of the Chinese economy, the second biggest in the world. We've seen commodity prices tumble, we've seen risk aversion coming through, and all of that is very negative for the rand. And then on top of that, you've got kind of socio-political developments taking place in Turkey, Malaysia, that isn't helping emerging markets either. So as an asset class, emerging markets are under a lot of pressure. I will also add there's one other sort of thing at play that we've picked up on, and that is with the Fed now hiking, or expected to hike interest rates pretty soon, we've seen a lot of people actually moving into the euro to actually fund their sort of euro position. So what they do is they take advantage of the low interest rate environment in Europe to replace what they were doing in the US. But now we've seen actually the euro dollar moving to high levels. So that trade isn't working either. So people are cutting those positions as well. So in a nutshell, people don't like emerging markets, and that's why we see in the rand and other very liquid emerging market currencies come under a lot of pressure. We've seen Brazil, the Brazilian real weaken considerably this year, Turkish lira and the rand. All of those are the emerging markets that people like to trade because they're liquid markets. And when things go sour, those are the ones that get the hardest.
Okay, so what are the implications for ordinary South Africans? Are we going to see an interest rate hike in September? Because this means more expensive imported goods, more inflation.
The one silver lining is that oil prices are falling at the moment. Oil prices make up about 20% of our imports. So the rand price of oil, even though the rand has been weakening, has been declining. So that's a sense of a source of relief and source of comfort, but that's only 20% of the basket. Like you say, all the other things that we import in are generally in dollars, and with the rand so weak, that's going to add an element, a fresh wave of imported inflation. Now, the last inflation readings that we've seen have shown us that there hasn't been a lot of pass-through, what we like to call pass-through, from weak exchange rates into high prices, because basically local producers are reluctant to increase their prices. They're concerned that they'll lose market share, so they squeeze in their margins. But that can only last for so long. At some stage, those higher costs that they're feeling are going to be passed on to consumers.
My final question, you've been obviously watching the markets for a while. Today I've seen reports of even what's happening in America being called a crash, although that's not technically correct. You need quite a significant fall. But how would you describe what is happening on the markets? How worried should we be by what seems to have started in China and is spreading and is not going anywhere for a while?
It's an emerging market, bear market. I think that's, you can quite clearly see in those moves that you mentioned. 8% in one day. Typically a bear market is described as anything as a 10% correction. We've seen that quite significant.
When do you say the markets are collapsing around us?
Well, at some point there's going to be value found, and I think in South Africa's case we do have natural shock absorbers in place. The Reserve Bank is not going to intervene in the rand. They said that today quite clearly again. I just reiterated that. But we've got a large domestic savings pool to draw from. Local pension funds, local insurers have to buy most of their assets in rand terms, so there is going to be a buyer. The question is, at what price will they come in and buy those assets? They could be at lot lower levels, but there are shock absorbers. We can't just take money offshore as much as we would, sort of wish to do. There are exchange control regulations for locals, so there are these shock absorbers in place, and there will be a price. But at the moment, it's not looking good because a lot of global forces are working against us. I think the domestic fundamentals aren't particularly encouraging. We still have concerns around the Eskom, the wage settlement in the mining sector. But clearly, the rand hasn't really been reacting to that. It's been reacting more to these global forces. And again, it comes down to the fact that the rand is heavily traded in these markets, and that's why it bears the brunt when things go sour.
All right, so the rand on the ropes. Thank you very much. That was currency strategist Michael Keenan. Well, he was